Hey yo, what is up with the new week and going on with my people, the Chico Army? And if you don't know who I am, you are just a lowly viewer of the tube. I'm Tyler, the host of the crypto channel that delivers you that fire content no matter what. You know our real life twisted metal. It's time for Chico Crypto. Well, isn't this a twisted thought of mine? Ethereum is going to be the gravity well that sucks in all the assets, crypto and beyond. And it begins with the granddaddy BTC. I'm sure you saw the headline over the weekend from CoinDesk. Bitcoins are being tokenized faster than they're being mined as DeFi craze continues. And in the article it shows that over the last week there were more wrapped Bitcoin wBTC minted than were mined by the Bitcoin protocol and participating miners. Now you guys should know what wBTC is. It's a centralized, as of right now, version of tokenizing Bitcoin on Ethereum, which uses a combination of customers, merchants, and centralized custodians who watch over the placed BTC. So a centralized version of BTC on Ethereum is already overtaking and outpacing Bitcoin mining production. What's going to happen when it's fully trustless and that bridge is fully secure? Well, going to the wBTC website and their community list, this centralized version was made possible through a collaboration of crypto companies coming together, including Kyber, Ren, Custodian, BitGo, Set Protocol, Compound Maker, and more. Now, within that list of projects, there's a certain one that is taking the next leap into Bitcoin on Ethereum and creating the bridge that doesn't have a central gatekeeper saying who can cross, when, and why, but it's open to all at any time for any reason. Were you able to guess right? That project is Ren, and I don't think many people realize the value and what they have brought to the table. So how are they getting Bitcoin on Ethereum in a trustless way? Well, through their renVm, or virtual machine, which got its mainnet released just in late May of this year. How does it work? Well, I've explained it a few times, so here's a quick version. DApps can use the VM to swap BTC for renBTC, which is the Ethereum version of the BTC. In the background, the VM is a distributed network of dark nodes, over 1,100 nodes right now to be exact, where all the nodes take custody of the BTC private key. The VM, aka network of nodes, then mints the renBTC and it's sent to the customer or requester's Ethereum wallet to use in the DeFi ecosystem. Now in reality, the renVm has only had 2.5 months on the mainnet, a sliver in time, but the VM, it's picked up like crazy. Going to the charts on daily mints of renBTC, it was slow to start, but by the middle of June, mints started to pick up, getting above 250 BTC per day. Then by the middle of August, we broke the 500 level, actually getting to 750. But look at just a couple days ago, over 1,500 renBTC minted in one day, which means over 1,500 BTC were locked in the renVm with those dark nodes. That is over $17 million in just one day. And if we go to their dashboard, the total value minted as of yesterday was 91 million. That is over 18% in just a single day. So yeah, things are picking up for Ren, and it has everything to do with BTC on Ethereum, because if you didn't know, the renVm works with other cryptos and blockchains too. If we go back to the dashboard, we can see both Zcash and Bitcoin Cash are available to mint, but it's not being utilized as all the minting is being done with BTC. Only a total of just over 27,000 of the 91 million minted is either Bcash or Zcash, pretty much not a zilch zero. So why is this? Why has the number of Bitcoin tokenized on Ethereum risen so substantially in the past month? Between the renVm and other options like wBTC and even more, we have grown from 15,000 BTC on ETH 30 days ago to 45,000 as of yesterday. Well, DeFi is your answer, and let me explain. There are whales sitting on stacks of BTC, some between 100 to 1,000 BTC, and even some with 1,000 plus. This is seen from BitInfo and their wallet-tracked rich list. There are 13,799 wallets with between 100 to 1K BTC, and there are 2,196 wallets with 1K plus BTC. Now that is a lot of money. Even at 100 BTC, it's over $1 million. So these guys are, in my opinion, the ones experimenting with these protocols, making a large bulk of the mints, as they have risk tolerance. If something goes bad, it's worse if someone loses 1 BTC when they only have 5 than if someone loses 5 if they had 100. So we know who is doing a majority of the Ethereum BTC mints, but why? What are they doing with it? Well, you gotta know they ain't just holding it in their wallets, as that is what their regular old BTC was doing, sitting and collecting dust. Again, DeFi, my friends, and I'm going to show you a freaking amazing example of it. So I have covered this DeFi protocol before, token sets, in a very informative video of what it is, how it works, and if you're interested after this video, it's in the description. But a quick overview. It's a trading protocol of sorts where you buy into certain preset trading strategies based on automation, aka robotic sets, or people, called social sets. The strategies are actually just tokens, which people buy and sell, and your share of the set's tokens represents your share of the strategy's pool, and it grows and falls based on the underlying set token trading strategy. Now I wonder which token set is the largest, which has grown the furthest since the social set launch. Well, in the social category, sorting by highest set cap, we can see it's a BTC Network Demand Set 2 with over 128 BTC with it. So what does the set do? Well, into the details of it. The set was created by the Bitcoin data analytics firm ByteTree, and the set aims to protect investors against large drawdowns in Bitcoin's value and boost overall risk-adjusted returns. It will enter Bitcoin when the fundamental network demand is strong and exit into compound USDC on weakness. The algorithm incorporates 4 network demand metrics across 6 different indicators to give an overall allocation score. These metrics are network fees, transaction value, velocity, and miners' change in inventory. So it automatically goes into and out of stablecoins and back into and out of Bitcoin, actually wrap Bitcoin, based on BTC fundamental data from ByteTree. That is not freaking possible right now on the BTC blockchain, where a smart contract does the trading for you in a trustless way. And this is just one example of where Bitcoin is going. And in a second, I'll show you more. But first, a word from the sponsor of this video, CoinZoom. And like always, the full details of our agreement are down in the description. Now, CoinZoom is the full suite of crypto options, including a sleek and fast crypto exchange with fiat on and off ramps, Visa crypto cards, and more. And it's based and regulated within the United States, which we know is few and far between. So another option with more options should be welcome. Now, what I'd like to show today is some of those options, and we need to begin with their card, as it's what sets CoinZoom apart. Now, when people think Visa card, they automatically think of a physical card, one you can hold in your hands. But the nice thing about their option is if you sign up, you automatically get a digital version of the card on their mobile application, and links for that are of course in the description. And this digital version can be used right away to spend online, anywhere Visa is accepted. Amazon, Microsoft Store, on your Xbox, basically anywhere on the web. And if you want to get a physical one, it's a one-time fee of 100 of their Zoom tokens, which as of right now is under $30. But regarding the Zoom tokens, if you just hold them, you can be granted different card levels, each with their own rewards and perks. And the next thing I would like to talk about is some of the coolest perks from that. ZoomMe Global is their P2P transfer system built into their mobile and desktop applications, and this allows you to send both crypto and fiat instantly and internationally between friends and family. With the basic green card, your limit is $500 per day with ZoomMe, but with the black card, you get up to $10,000 per day. Another slick feature of the card is the debit roundup feature, which is included with even the basic green card. And this feature keeps your skin in the crypto game if you would like to. So for each purchase with the CoinZoom card, you can automatically have it round up to the nearest dollar amount, and that fiat amount is transferred back to your CoinZoom account. Since the merchants are taking cash and your crypto is being converted into cash for those merchants, the debit roundup will return that cash amount, rounded up, back into the crypto or cryptos of your choice to keep your skin in the game. Those are just a couple of the perks. There are more, like cashback rewards, cardholder trading fee discounts on their exchange, earning interest by holding your crypto with CoinZoom, staking rewards for both Algorand and Dash, plus a whole lot more. So if you're looking for another, more robust, regulated fiat option within the US, CoinZoom just might be up your alley. Now, back to what else you can do with your Bitcoin on the gravity well Ethereum. Set protocol, decentralized copy trading and strategies. Not bad, but what else? Well, we can check. Going to CoinGecko and looking at markets, we can see where wBTC volume is coming from. Sorting by highest volume. Number 1 is Compound. Number 2, Curve Finance. Number 3, Uniswap, and number 4, Balancer. And then renBTC, not on Compound yet, but number 1 is Curve, number 2 is Balancer, and number 3 and 4 is Uniswap and 1inch. Similar with Curve, Balancer, and swappers like Uniswap. But first, let's examine wBTC on Compound. Here are the market details for Compound. As we can see, over 2,200 wBTC are being supplied, which is over $19 million in Bitcoin. Now, if we look at APY from supplying it to borrowers, it's just over 0.63%. Now, why would people do this for such a low return? Well, there is markets being made, and I wouldn't doubt some whales are playing both sides of them. Now, if you see the distribution APY, you also get a 1.36% for supplying due to Compound Governance token rewards. That is the supply side, though. Let's take a look at the borrow side. As we can see, to borrow BTC, you would be paying an interest rate of 5.84% per year. Yikes. But since Compound's governance tokens are given to borrowers too, not only suppliers, you can see they have a distribution APY right now of 11.87%. Thus, to borrow wBTC right now, you are actually getting paid, as you have a negative interest rate of 5.86%. So, farming those Compound Governance tokens, that's what it's all about right now, because there is large value with those, and people are taking advantage of this. But what about the other ones, like Curve Finance? What is going on there? Well, going back to wBTC's markets, the second largest one of Curves is the wBTC and renBTC market, with over 14 million in 24-hour volume. The centralized Bitcoin on Ethereum and a decentralized version getting swapped back and forth. Interesting, but why? Well, this has to do with you getting in on the action. Do you have BTC just collecting dust and want to quickly get into the world of Bitcoin DeFi? Well, the wBTC Cafe is the best place to do that, and this was created none other than by Ren. What it does is allows you to skip those checks and mint wBTC at any fraction right through the application, and it connects right back up to any online and hardware wallets. The wBTC Cafe uses a combination of the renVM, renBTC, wBTC, and Curve Finance to accomplish this, as Curve is a swapping protocol created for minimal slippage, which this needs. So me and you, we can get in on this DeFi on Bitcoin action in a trustless manner, and people are taking advantage of this. And the more people that demand wBTC through the cafe, the more renBTC that is needed. It's self-reinforcing, and it's solidifying that Ethereum is the gravity well. Cheers, viewers. I'll see you next time.